Lori, I'm going to go to you first. Are we bouncing along a bottom here? Are we trying to find a bottom?
It's a great question, Morgan. And I think the same way prior to the Rose Garden tariffs that the market was trying to kind of testing that 10% down from peak level and really trying to hang on. I think that's what the market is trying to do in here. 20% is an important threshold, and we came very close to that earlier in the week. At our maximum point of pain, we were 18.9% below the February high. And that's important because if you go back and you look at that drawdown in 2018, which is very similar conditions to what we have in the market today, you had a trade war, you had concern about Fed policy error. Today, not so concerned about the Fed, but other policy errors are under discussion. And there was also extreme positioning and valuation froth to start the year. So that's a really good template for looking at today. And we're getting very close to that maximum point of pain on some of the worst days that we've had recently.
Adam, want to get your thoughts on this, especially as you have different pieces to the puzzle. You have the technical piece, you have the fundamental piece, especially as earnings really start to ramp up with the banks beginning, some of the big banks beginning tomorrow. And then, of course, you've got the macro piece, which still carries a lot of uncertainty. How do you see this market here with the S&P settling? It looks like 52.68, so down about 3.5%.
Yeah, I think the Wednesday pause took some of the more extreme tail risk scenarios off the table, which is obviously positive. It also revealed kind of where the White House's pain thresholds lie. So, the pain threshold has been much higher than I think most people anticipated. But we did get a good sense that around, 5,000 on the S&P, and we also saw them respond to bond yields, that they will be sensitive to market price action despite kind of some of their indifferent tones. So removing some of the extreme tail scenarios from the table is positive. It helps put a floor under the S&P. So 5,100, 5,000, that seems like it's going to be a relatively stable base. Now the question is just working through this extreme uncertainty that still is present with tariffs. We still have a very heavy tariff burden in place. There's a lot of uncertainty as to what comes next on tariff. And like you said, we're about to hear from the entire S&P 500, and it's very likely companies are going to be more cautious on these calls than they were in January and February. And so you have a lot of risk to earnings estimates for the full year, and you just don't have a ton of valuation support in the marketplace. So it's kind of, definitely put a base in, but the upside case is still very hard to see.